floats it towards at the goal line. It's intercepted.
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, plunges into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
You've missed it. Saudi Aramco shares have opened 10% higher in their debut on the Tadal in the world's largest IPO. The oil major opened at 35.2 riyals per share after listing at 32 riyals. That gives the company a market value of around $1.88 trillion. It makes Aramco the world's most valuable listed company, but falls short of the $2 trillion valuation Saudi Arabia's Crown Prince Mohammed bin Salman was seeking. So some stunning pictures coming through as the celebrations continue in Saudi Arabia today. And now a quick look at some of the market action as we also join the party today. Early signals just crossing on this heat map behind me, and what has been a real headline week for many investors as we count down to fresh trade tariffs between the US and China, UK election this week, and of course the Fed two-day meeting being conducted for some view on what monetary policy could look like in 2020. With such significant risks, you can see a level of caution coming into stocks at this point. A lot of unanswered questions, and the benchmark here sliding just a fraction at the open on the back of losses yesterday. We saw the index lose about 0.25%. Let's dive into the sectors. Huge focus too on the oil industry this morning to see how some of the competitors to Saudi Aramco are trading at the market open as well. So early on, telcos, bottom performing sector, down 0.4%. In fact, more red ink on this board than green by sectors. Telcos sliding with a couple of big ones, BT, Telefonica, all in the red at the start of the session, along with Orange in France. Media stocks also reversing. Now, oil and gas, I mentioned some of the focus on this sector. Total in France trades weaker. Eni also in negative territory. And you can see the slide just over 0.1% in that basket of stocks. We've been talking about whether there will be some benchmarking around the Saudi Aramco listing, that those holding emerging market listings, ETFs, may have to own the stock passively, other than some of the active investors are getting involved in Saudi Aramco today. Retail stocks, we are 0.2 in the red on this sector as well as we start out the trading session. Big focus on Inditex, which reported this morning, the owner of Zara. Bit of a pop in that stock already, which is compensating for some of the losses. The real estate sector drifting south by 1/10. Chemicals, travel, leisure, all below the flat line. From there, we start to move into the green with autos ahead. Technology, a similar size gain, but it is healthcare and basic resources, the better performing parts of this market this morning. Let's switch over the charts and see where some of that green is making its way onto the boards. It's on the FTSE. We had anticipated we might see a move into the green today, shedding some of the red ink we've seen recently. The level 7230 on the boards. We did drop about 1/3% yesterday, so recovering some of that territory as sterling has been moving, this time lower. And on the latest research, this from YouGov, suggesting that there is still a chance of a hung parliament. So some of the lead we've seen from the Conservatives now starting to narrow in the final countdown. So the market seeing that weakness in sterling push up the FTSE, that inverse correlation existing at this point. Sometimes we have seen the two correlated, where you've seen a bounce in sterling, bounce in the UK market, and also the reverse, where a drop in pound has led to a drop in the UK market. But at this point, it is that inverse relationship that is playing out between the two. Elsewhere, a little bit of green just splashing onto the French market, more on the DAX. There's been one of the better performers early on, almost 0.2 higher, and we are seeing the market elsewhere slightly more negative, just below the flat line for both the Italian and Spanish stock markets, reversal too for Swiss stocks. So I want to drill down to those oil majors on what has been such a significant day for the listing of Saudi Aramco. You can see Total still in the red. The French stock is the one that is a casualty on the boards, along with Eni in Italy, but we are still witnessing gains take place in Shell, up 0.7%, and BP trading up by 0.4. Just to recap on some of the big headline news for you, Saudi Aramco CEO Ahmed Nasser says he is happy with the results of the IPO following an opening ceremony filled with pomp and circumstance. Hadley is in Riyadh with more. Hadley, we've seen lots of glitter at that opening ceremony, lots of applause after what has been a stunning debut, and I think many investors had questions as to how this one would actually be pulled off on day one. Just talk us through the action.
Absolutely, Karen. I mean, it's glitz and glam, and nobody does it quite like Saudi Arabia, as you very well know. Earlier today, we heard comments, as you mentioned, from Ahmed Nasser, the CEO of Aramco. We also heard from Yasser Al-Rumayyan. He's not only the CEO of the Public Investment Fund, he's also the chairman of Aramco, as well as seeing quite a few folks on that stage, including the country's former finance minister, Ibrahim Al-Assaf, a gentleman who's been pushing for this, as we know, for quite a while. Now, just in terms of what's happened in the last few minutes alone, of course, this is a stock that opened up, of course. There is a limit in the Tadawul that allows the stock to only go up or minus as much as 10% in any given day, and that's a rule for every stock that trades on this local index. This index, of course, is the biggest in the region. This is the biggest economy in the region, and I've said it before, and I'll have to say it again, that this is a country's economy that really does bleed into the health of economies in the surrounding countries, the UAE, Kuwait. We're not just talking about the Gulf Arab countries, we're also talking about Egypt, as well as other countries across the region. Now, and just in terms of the stock itself, a lot of excitement, frankly. We've heard from the folks on the ground here in the last few days. The country's energy minister speaking to me late last week, saying essentially that this would be the greatest day of his life, the fact that Aramco would come to market finally, the fruition, frankly, of the vision of the country's crown prince back in 2016. The Aramco IPO was expected to really be the linchpin, the major source of revenue in some ways for this economy going forward. We had to see all those plans scaled back in the last couple of years. Went from the hopes of 5% of the company being listed and as much as $2 trillion or more valuation, scaled back to just 1.5% of the company. In terms of what that means for the numbers, we're talking about a retail and as well as institutional investors. Institutional investors, of course, we're talking about 1% of the company, 0.5% of the company going to retail buyers. I thought it's very fascinating to watch how many Saudis themselves, 5 million of them, 13% of the population coming to market here, wanting to get involved in this Aramco IPO, seeming to signal at least that in spite of a lot of the questions that we've seen from the international press and governments across the world in recent years about the leadership of this country and the direction of this country, it seems as if a big portion of the Saudis themselves want to buy into the future of the country, and that means buying Aramco. In terms of the institutional investments, though, non-Saudi investors getting 23% of this tranche. The Saudi government institutions allocated as much as 13.2%. And when we talk about these, the fact that we've got the shares themselves, I think that's interesting in terms of the retail investment. 1.9 billion shares in terms of the retail tranche of this IPO. And again, the fact that 13% of the Saudi population thought it was a good idea to buy in does speak to me that there is a seeming shift in terms of the support for this country's leadership. Guys?
Thank you very much for running us through the latest. I'm going to push on and take you to one stock we're watching closely on the market open here in Europe, and that is Inditex, the owner of Zara, which has reported a 14% rise in third quarter profit. The Spanish retailer credited its ability to adapt quickly to changing design trends. The owner of Zara also said it expects 4 to 6% growth in full year's sales. Just a quick one on the share price. It was seen up 2%, so not quite closing that gap. And if you look at the overall share price performance this year, pretty decent, 28% return, but nowhere near the 57% reported by nearest rival H&M. So an interesting one for investors today as they weigh up the 9-month performance at Inditex and they look at rival H&M, whether they're going to be switching between the two at this stage. Jeff.
Terrific. Thanks very much, Karen. Christopher Peel joins us, Chief Investment Officer of Tavistock Wealth. Let's point out Janet Moy is also here with us, Global Economist at Cazenove Capital. Christopher, good morning to you. I read from your 2020 outlook, we're favourable for risk assets such as equities and commodities and neutral at best for bonds. Can you just walk us through that risk environment you're anticipating then into the early part of next year and why the positivity?
Well, I don't think the story's significantly changed. I mean, clearly the global economy has been slowing for the past 18 months. But the fact that you've had central banks come in and reduce interest rates to try and draw a line under the slowdown gives me the belief that investment will start to increase, and also the wind that's helping this whole process, I suppose, is the trade negotiations, whether versus China or the new NAFTA, which hopefully will be ratified relatively soon. This is going to kickstart, I think, another round or an increase in global trade as we get into 2020 and beyond. And that team with low interest rates, is a good environment to be long equities.
I tell you what, your crystal ball's working a lot better than everybody else's. How come you've got so much clarity on how this trade row is going to be resolved? We still haven't seen ratification of the new NAFTA replacement, the USMCA, and there was some suggestion that because that's bogged down in the politics now, that's why Trump was suggesting we may have to kick the China trade deal into post-election. So you seem to see things differently.
Well, I think the Democrats are now leaning toward supporting the new NAFTA, and it's on the table as we speak. In terms of the China trade, I think it really helps Trump's re-election to have some type of a minimum phase one deal agreed, because it shows that he's been successful in yet another thing on top of the tax cuts.
Janet.
Are you asking about the trade deal?
Oh, I thought you wanted a question to Christopher. No. Sorry, I misunderstood the signals there. Well, let me ask you the question. I think we talked a little bit earlier on about the prospects for a negotiated trade deal at this point. Trump had said previously that this would be kicked into the long grass and we may not get a resolution until after the election. Do we have to run with that prospect in our minds when we think about re-engaging with risk assets at this point, notwithstanding Christopher's ebullience?
In our view, we think that as long as the trade tension doesn't escalate further, I think that's quite a benign environment for risk asset already. And our base case is that the next tranche of tariff on December 15 will not go ahead. And I think markets would be pretty happy about that. I mean, a lot of that is priced in, but there's still a lot of uncertainty around that. So if we don't see further escalation, I think we're in a pretty decent environment for risk asset.
What about some of these other grey rhinos then out there, like the UK election outcome, the prospects for Brexit? He's got a Boris trade. Yeah. Well, let's talk about that.
A few people's given us clear. Come on in. What is it?
I have a Boris trade on. I've been underweight UK equities for the last 3 years, and we've now moved to a long position on the premise that the Conservative Party will win a David Cameron-like majority, a small majority at tomorrow's vote. There's obviously no certainty. The polls are very tight, but I think the UK population as a whole wants some finality to the situation, and that's what
the trouble is. Half of them want it to stay in Europe, the other half want to go out. That's the problem.
But it's not a trade without risk. But also sterling. I think the sterling is very, very cheap if one thinks Boris Johnson wins a majority. It's also grossly overvalued if somehow Corbyn finds himself in number 10. But the risk, that's not a 50-50 trade. I think Boris will get over the line.
Okay, I have a couple of questions for you. One very briefly on this one, then we'll move on. If you're right, and the Tories win a working majority where they can push forward with their view of the next couple of years' relationship with the EU, are you up against it on the currency working against your trade? Because obviously the dollar earner story.
That's because if I was long FTSE 100, yes, one could argue that a strong pound will hurt the earnings of the FTSE 100 companies. But I'm playing in the next tier down, the small to mid cap space, which has lagged over the last 3 years. So it's a UK trade from the equity perspective.
Right. Okay, well, I must give him a question there, because we're off camera. We've been talking about gold and gold-silver ratios, and silver on its own as well. And you implored me when I looked at the silver price, which is trading roughly, $14, $15, has been as high in 2011, $60 plus, I think it was. Well, so it's down. And then you told me, no, look at the gold-silver ratio. So I've done exactly that, and I've got a little chart on my screen as well. That's the gold-silver ratio again. What should I be doing in this space? Because be careful whatever you say, because you know what the bugs are like out there. They get very funny when you start talking about gold.
Well, this is the Widowmaker, so tread gently.
Widowmaker.
This is the Widowmaker, the famous silver-gold ratio.
Yeah.
Gold has morphed into something other than just an inflation hedge.
Yeah.
The fact that interest rates are as low, the opportunity cost of holding gold is dissipated. So you've got new buyers on the who are trying to substitute arguably maybe some bond-like risk in gold because the opportunity cost of holding it is zero. So that's really moved the ratio to where it is. Silver has fallen on love. I think there's been overcapacity or overproduction, but certainly there'll be lots of people that remember the Hunt brothers back in the early 80s, and it looks quite attractive.
Yeah, they tried to call on the market. It didn't go quite so well for them, did it?
Oh, so close.
Also close. Okay, let's move on. You're going to stay with us. We'll come back to the conversation. Janet, you're going to stay with us. We'll talk to you very shortly. Saudi Aramco shares have opened 10% higher in their debut on the Tadawul in the world's largest IPO. CEO Amin Nasser spoke moments ago and gave his reaction to the listing.
Right, we are progressing based on what was decided, which is to list Saudi Aramco at 52 riyals per share. This was agreed. Full analysis and evaluation. We are happy on the results today, and you have seen the market response to our results. The company will continue to be the leader globally when it comes to the energy sector, and at the same time, we are looking at sustained and growing dividends to our investors. At the same time, we will continue our growth strategy, increasing profitability across cycles.
A lot of noise on the floor there, but I think you get the gist. Excitement on the back of the Saudi Aramco listing. Meantime, a couple of stocks on our radar. Credit Suisse is one of them in the banking sector as it has pared back its profitability targets for this year and next. It's also warned its investment bank will make a full-year loss. However, Credit Suisse still intends to dish out more than half of its net income to shareholders with a bigger dividend and a share buyback. Stock is down 0.4%. In context, for the last 3 months, now fairly flat. To HSBC, which is telling us its Swiss unit will pay a $192 million settlement for helping rich Americans dodge taxes. The Department of Justice says the private banking arm hid offshore assets and income in undeclared accounts. The US authority revealed that between 2000 and 2010, HSBC bankers were traveling to cities like Miami to find new clients. Stock, though, shrugging off the news, bouncing 1.1%. UBS has lost a bid to dismiss a US lawsuit over catastrophic investor losses linked to mortgage-backed securities. The DOJ says UBS also securitized mortgage loans before the 2008 financial crisis, knowing that underwriting standards had been severely deteriorating. Steve.
I'm still reading about the Hunt brothers in 1980. Quite extraordinary as well. Everyone should read the story. Right, okay, coming up on the show, a new report signals the Trump administration may delay a fresh round of tariffs on Chinese goods. It's all happening this week.
Christmas, a time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Sometimes in business, you have to take risks, but trading across borders and currencies shouldn't be one of them. With Western Union Business Solutions, we can help you manage the risk of doing business internationally. Our valuable experience, expert knowledge, and extensive global network makes us the ideal trusted partner for your business. And with our customer-focused support team, you'll receive a dedicated solution and personalized service. Visit westernunionbusiness.com. Western Union Business Solutions, a global financial network you can trust.
The Better Network is now on TuneIn. This is Brian Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Hey, TuneIn listeners, Steve Kornacki here from NBC News. I want to tell you about a podcast I'm hosting called Article 2, Inside Impeachment. It's dedicated to bringing you the latest developments on the impeachment inquiry into President Trump. Every Monday, Wednesday, and Friday, I talk to NBC News reporters who are closest to the story to break down what's new, what matters, and what it means for the 2020 election. Search and favorite Article 2, Inside Impeachment on TuneIn.
To LeBron, slam dunk. The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. The Miami Heat are taking their talents to Texas to take on the second-year phenom, Luka Doncic, and the Dallas Mavericks.
Pulls back, trying to make it 11-2.
This Saturday, the Miami Heat are at the Dallas Mavericks. Tip-off is at 8:30 p.m. Eastern. Search NBA on TuneIn to follow your favorite NBA team today.
A number of European stock markets now bouncing into the green as we move throughout the session. Some news to watch out for. The Trump administration could reportedly delay a new set of tariffs on Chinese goods due to kick in on Sunday, according to the Wall Street Journal. Postponing the deadline suggests U.S. and Chinese negotiators may have made advances on the so-called Phase 1 trade deal. A couple of trade-related baskets and autos being one of them. You can see popping into the green in lockstep across the board. Only patches of red around Ferrari and Fiat at this point. Chip makers in the technology space, this is how it plays out. Modest gains we're seeing in a couple of big majors, Dialog Semiconductor, ASML, ST Micro, but fallen AMS stock. And elsewhere in the mining names, the ones that we saw, very decent start to the trading session this morning as it raced towards the top of the stock strip 600. And you can see gains of more than 2% in Anglo American, BHP solid, and Rio a bounce of almost 1.6%. Jeff.
Yeah, thanks very much indeed. Let's go back to the conversation we're having around strategy and the outlook for 2020. Christopher Peel is with us, Chief Investment Officer at Tavistock Wealth. Janet Moy, Global Economist at Cazenove Capital. Christopher, let me just pick you up on your dollar call here, because there is a big body of cash, I think, looking at the emerging markets and trying to decide whether 2020 could be a better year than we've seen already this year. And it seems to be the swing factor on that is what your call is on the dollar for next year. So what are you looking for?
I'm looking for the interest rate differentials to work against the dollar, which is why I'm looking for a very marginal grind lower. It's not a big call. It's 3 to 5%, but 3 to 5% down in the US dollar on a trade-weighted basis helps emerging markets, obviously, because interest rates are so low anyway. So I think it's a plus for EM equity and local market debt.
The States will still enjoy an interest rate lead over the rest of the world, and as it's demonstrated with its recent jobs data, it looks like the strongest market in terms of aggregate demand at a consumer level. Why the justification then for weakness for the dollar from here? Surely they're going to continue just to attract capital from around the world as they look like a better prospect.
Well, I suppose I look at it as maybe the weight of money. You've seen some activity 12 months forward on buying puts on the U.S. equity market. What isn't in the price is a change of leadership, a move to the Democrats and potentially Elizabeth Warren. That could have hugely negative consequences for U.S. equity. So I think global asset allocators who have had a fantastic run in U.S. equities, that rotation is going to start, which is going to chip away at the demand for dollars on a global basis.
Janet?
Yeah, what we think is that if we start to see more green shoots in manufacturing, if there are progress in the trade talks, then actually the more cyclical areas of the economy, such as Eurozone, EM, they should start to benefit. And if that's the case, actually US dollar tends to weaken because I think capital will start to go into these kind of cyclical and more growth areas of the global economy. So what we expect is that if all these play out, what I mean is green shoots coming out, the trade progress is happening, and then we will start to expect some modest depreciation of the US dollar next year.
But is the US stock market perfectly priced for the underlying economic scenario which you two are both looking at for 2020 as well? Because we haven't discussed profitability. And whilst the labour market looks incredibly robust at the moment, and whilst inflation looks incredibly dull at the moment, and the US is growing at a premium to what we're seeing in Europe, I'm just wondering about the profitability of the stock market. And something we haven't really mentioned much this year, but we spent a lot of time over the previous couple of years talking about it, which is the profits recession. It's kind of gone into the ether a little bit this year.
Well, I think I would look at that as what do you want? Where do you want to invest? Buying bonds at levels down here where interest rates, a good chunk of the global bond market's in negative territory. You still have inflation, although it's low. So you're locking in negative real rates of return in bond land. So to put your money to work in global equities, the opportunity cost is as low as it's arguably ever been. So you're right. There is the earnings growth has slowed, but the alternative investment opportunity doesn't seem to be there.
Does the earnings growth matter? It sounds terrible to say that, doesn't it, at this point? But do we need to be more worried about whether the Fed's balance sheet goes from 4 trillion to 4.5 trillion to 5 trillion as a source of continuous liquidity to drive risk asset prices higher at this stage? I mean, if you sat any strategist down at this point last year and said to them, you're going to make 25% on the S&P next year, they would have looked at you like you were an alien.
Plus dividend.
Quite frankly.
Plus dividend, yeah.
Right? So, again, we're having to make that kind of call at this point as we look toward 2020. Isn't the key issue going to be just how easy the Fed is going to continue to be on that balance sheet expansion and the support for the repo market rather than what the earnings profile looks like?
Yeah, and I think my view is the looking at QE, marking to market, it's only half time until the balance sheets go back to where they to zero. Until the central banks have sold their holdings or had their holdings mature, the clearing rate for interest rate for new government issuance is it's a false market. So until QE is unwound, we don't know where the trade stands. At the moment, it's been a good trade.
Excellent. Chris, just want to make sure everything's okay. You look different today. There's something about you, I don't know.
It's the tie for my mother.
It's the tie for your mother, isn't it? And this is just the backstory is you're normally very relaxed, a couple of buttons undone, just kind of flown in from somewhere exotic, but you've got a beautiful tie on today. You're incredibly smart.
Thank you. I can assure you I'm very relaxed.
But it's lovely. Is it Mrs. Peel?
That will be my mother's name, correct.
Mrs. Peel, lovely to have you as a viewer on Scorebox. You can watch the other days when Chris was not on as well. It's amazing how we all...
Great taste, though, don't you think?
I think he looks fantastic. I think putting off the double-breasted is not an easy call either as well. So you do it with aplomb, sir. Have a lovely holiday, and the best wishes to Mrs. Peel as well. Christopher Peel, her lovely son, Chief Investment Officer at Tavistock Wealth. And just to say, coming up on the show, more from Credit Suisse Investor Day with the CEO Tidjane Thiam due to address his shareholders after cutting profit targets this morning.
CNBC app has new features just for you.
Christmas. A time for celebrating, unwrapping, and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit tunein.com/premium to upgrade.
Cutting for the net. Scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today. The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown.
Search NFL today.
Hey, tune in listeners. Steve Kornacki here from NBC News. I want to tell you about a podcast I'm hosting called Article 2, Inside Impeachment. It's dedicated to bringing you the latest developments on the impeachment inquiry into President Trump. Every Monday, Wednesday, and Friday, I talk to NBC News reporters who are closest to the story to break down what's new, what matters, and what it means for the 2020 election. Search and favorite Article 2, Inside Impeachment on TuneIn.
Aramco shares rally 10%, hitting the Tudwell's daily limit in the world's largest IPO, giving the oil giant a $1.9 trillion valuation. Credit Suisse cuts its profitability targets for this year next, citing ongoing pressure from the negative rate environment and uncertainty from trade tensions. Basic Resources outperforming European stocks amid reports the US could push back a deadline for imposing fresh tariffs on Chinese goods. And the Great British Pound weakens against the US dollar after a new poll raises the prospect of a hung parliament as UK party leaders prepare for a final day of frantic campaigning ahead of tomorrow's election.
Markets here in Europe have been trading for half an hour so far. We have managed to shed some of the red ink that we started out the session with. A bit of improvement in some of the core markets, particularly the UK, where we've seen a bounce of almost 0.4%. Some of that is sterling marks lower based on the latest YouGov poll, suggesting that there is a chance of a hung parliament after the UK election. So that weakness in sterling supportive for the UK stock market. German stocks have also been in the green as well, and that's bolstering the position, just trimming some of the red that could be on the boards. Given how strong a week it is for a number of the big themes investors have been concerned about right throughout 2019. Trade. There is a concern that fresh trade tariffs will come to force on Sunday unless they are actively avoided by US President Donald Trump. We've also got a two-day Fed meeting giving us a sense of what type of policy action we're going to be witnessing from the US Federal Reserve next year, and the UK election, whether that delivers movement around Brexit. Big questions for investors as we move throughout this session. Let's just switch over and see what the sectors look like as we've had a sound Saudi Aramco listing today, listing that has been successful on day one. We've seen a pop in the share price of 10% as it's been limit up, and that's been positive for some parts of this market, as you have seen in the oil sector today. Top performers, autos, basic resources and banks. We are seeing some decent leadership now from these sectors and split between green and red by sector level, where we had more red at the start of the session. So there's been some improvement to the upside so far. Real estate, telecoms, two weaker parts of the market, somewhat defensive components. In terms of the actual stocks, you can see as we switch over the boards, a couple of big oil names moving on to the boards from Tullow Oil in this part of the market. In terms of the weaker ones, JD Sports is in the red at this point. Wirecard, Telefonica, some of the weaker stocks, and Electrolux are thrown into the mix, slide of about 1.8%. Jeff.
Yeah, thanks very much indeed, Karen. Let's go back to our headline story this morning then. Saudi Aramco shares have opened 10% higher in their debut on the Tadawul in the world's largest IPO. The oil major opened at 35.2 rials per share after listing at 32 rials per share. That gives the company a market value of around $1.88 trillion. It makes Aramco the world's most valuable listed company, but falls short of the $2 trillion valuation Saudi Arabia's Crown Prince Mohammed bin Salman was hoping for. Let's get out to Hadley, who's with us from Riyadh. And Hadley, now we've got a good sense of market demand here. That 10% limit upside kicking in. That's about as good as it could have been today, isn't it?
Absolutely, Jeff. I mean, it seems as if in so many ways the sun's really come out here. One of the things that, of course, we've been talking to investors about and potential investors about has been that $2 trillion valuation, and the fact that they weren't able to make that in terms of how that really reflects not just on the Crown Prince Mohammed bin Salman's plans for this company, but also on the company itself. But folks saying to me, 1.88 trillion where it's sitting right now, that just ain't that bad. And folks as well saying that the fact that you have 5 million Saudis in the retail tranche of this IPO willing to invest in the future of their country, that also speaks to a level of confidence in this government that perhaps was questioned in the last couple of years, particularly surrounding some of the major PR disasters, if you will, that we've seen hitting the Saudi government. But also in terms of what's happening next, in terms of how this is all playing out. You have to remember that we're talking about Saudi Aramco. 10% of the market cap of the Saudi Tadawul is made up by this Aramco IPO now. And also, of course, this moves the dial forward slightly, making this the 9th largest market for market cap in the world. So certainly a jewel in the Crown Prince's cap, if you will, not just the Aramco company itself in terms of what happens next there with the listing of 1.5% of the company, but also in terms of what this means more broadly to his Vision 2030, guys.
Hadley, sorry, I beg pardon, staccato. I'll say on air one thing we were saying. Here you go, I'm going to do this. Let's be done with this and get the $2 trillion out of the way, because that is what the Crown Prince would like to see. That is what the owners would like to see as well. And we know that there's been enormous pressure domestically to get it up to that valuation. Why don't we just get done with it and get it up to $2 trillion?
Since when have the motivations of the ownership structure been number one for stock market valuations?
Since when have we had Saudi Aramco IPO before? Nothing is extraordinary in this IPO. It's all kind of, becoming its new norm.
Well, it's just math, as the Americans say, isn't it?
Math.
So tomorrow, if we get another 10% upside, and then another 10% after that, then we will get to your $2 trillion, won't we?
Yeah. I honestly believe, and from the bottom of my heart, and I know we'll get to Credit Suisse in a moment, I honestly believe that you're going to have a situation where a certain load of buyers don't believe it's worth $2 trillion, which may well represent the constituency that Mr. Beveridge from Bernstein was talking about earlier on, and then there may be local investors, Middle Eastern investors who are saying, we believe it is worth this $2 trillion valuation as well. Look, let's be honest about it. If you want to trade the oil price, you want to trade exposure to the oil price, you want an income stock on the back of the oil price, there was already a plethora of high-yielding alternatives. Now you have a domestic player, albeit the most profitable oil company on the planet, albeit with the largest reserves that are accessible and usable. I mean, there are others like Venezuela, but let's leave park Venezuela elsewhere. It is a very well-run company, but it is not a cheap company, is it?
Do you think that there is any trading domestic or around in Europe on the back of this story? Because the two stocks that were trading weaker were Eni and Total. Do you see any links between that and Saudi Aramco?
I see a lot of links, because these companies are the relationship between the IOCs and the NOCs. We've talked about for decades. And dare I say, we've all done a bit of work on this as well. And the IOCs used to own a lot of reserves. Now the IOCs don't own the reserves. They're all owned by the NOC. So that's one of the big changes. It used to be that the IOCs then have all the technical knowledge and the NOCs don't. But again, that difference is eroded. I think the speed of transition is absolutely key for the global investor going forward. Every time I go to a conference, whether I'm at ADIPEC, whether I'm speaking to Mr. Barkindo, whether I'm at the IEA, where I was at a ministerial last week as well, what happens on this transition is key. Nobody can deny that. We know there's an energy transition going. The role of hydrocarbons in that transition is pivotal. And depending on your view of the longevity of hydrocarbons, that will skew your pricing. Everything else, as far as I'm concerned, is not immaterial, but is a secondary factor. We have to move on. Let's get to the story I was being told to do. Credit Suisse CEO Tidjane Thiam is speaking at the Lenders Investor Day in London. The company pared back its profitability targets for this year and next and warned its investment bank will make a full year loss. Should we listen in to Tidjane Thiam? Let's do that.
You know the rule, as we said, we stay in the room as long as there is any question in the room, so it will be dependent on you at what time we go for dinner tonight. So let's start. I have three sections in my presentation: 2019, the momentum. Then, given the difficult environment, I will talk about our model and we think its resilience. And finally, I finish on capital. So, always start at the beginning. The strategy, you've seen this slide many times, is to be a leading wealth manager with strong investment banking capabilities. We've never retrenched from that. We believe that the two are crucial. And we have been taking, We've been taking a balanced approach between mature and emerging markets. This is another important point. It's not just an emerging market strategy, it's a balanced strategy explicitly between the two. And with this focus on ultra-high and entrepreneur, which I think has served us well. And also, I call it working both on the asset and the liability side of the balance sheet of our clients. So bringing a holistic solution to their needs. So, wealth, investment banking, let's look at what happened in wealth. You're familiar with this slide too. Global wealth has increased by about $30 trillion. That's a 6% CAGR over the period. That's 1.5 times the US GDP. It's a lot. It's a lot. So, basing the strategy on the fact that...
All right, there's Tidjane Thiam down in the east of London. Someone who was in the east of London, but I understand got booted off the Canary Wharf estate. Is this true? You were escorted off the premises of one of the most secure parts of London.
I can't confirm nor deny.
Okay, right. Well, I can. Anyway, lovely. Their loss is our gain.
And
so
more warmth in the studio. So
there is a wealth of warmth as well. What would you like? What are the key points?
Yes, I want to tell you about the Credit Suisse Investor Day. So let me just...
I want to ask you just a very simple question. If you had to give me 3 bullet points that a Credit Suisse investor didn't know yesterday that they do know today so they can make their investment decision, buy, sell or hold, what are they?
Okay, fine. Let's do it that way then.
Fine.
Return on tangible equity targets have been revised lower. This was always a big focus for Credit Suisse investors. Previously, Tidjane Thiam, the CEO, who is just speaking now, has guided to 10% for the end of 2019, 11 to 12% for 2020. Seems like they're not going to achieve those targets, merely because they haven't been hitting their revenue targets for this year. In order to get to 10%, they would have had to achieve revenue growth of 5 to 6%, according to banking analysts. They're tracking around 3%. So they're probably going to come in around 9%-ish for 2019, and they've guided to around 10 to 11% for 2020, which now analysts are saying are a bit more achievable, seem in line with what general analysts out there are expecting the company to do on the revenue side of things. Second point, investment banking is pointing to a loss for the year. Now, you have to make a distinction between the investment banking unit and their global markets unit. They've pointed to good activity in the fourth quarter.
What's the subtle difference between the two?
One is advisory fees, underwriting, and the other one is securities, trading, fixed income, markets, etc. So they said the activity on the global market side has been pretty positive for the fourth quarter, so that is a positive surprise, but they're still saying their investment banking, advisory, underwriting, M&A activity, which is sort of the language that you're hearing from other investment banks, is going to be weak for the year as a whole. They've guided to a loss for the fourth quarter. That was the second point. Third point is when it comes to share buybacks, for this year they've tracked around 700 billion Swiss francs of buybacks, about 700 billion 700 million rather. What am I saying? No, I'm multiplying. 700 million in buyback, 700 million in dividends, a total of about 1.4, 1.5. Now they're guiding next year to a dividend increase of 5% and 1 to 1.5 billion in terms of buybacks for next year. If I had to sum up what
you're summing up, I would say there's a dose of realism hitting this stock.
Yes, yeah, absolutely. And I think actually, Steve, to put it in the context of how this stock has done this year, if we could bring up the chart of Credit Suisse, we're basically up around 20%. And actually, Credit Suisse has outperformed UBS, its other Swiss competitor, for the year in 2019. Hasn't fully yet recuperated the losses of last year. Last year was a very heavy year of losses for Credit Suisse. They were down 28% in 2018, up 20% this year. But clearly, the focus from Mr. Thiam continues to be one of reshifting away and resources away from the very cost-heavy investment bank towards wealth management and asset management, which of course continues to be areas of progress. One thing I would just add is you'll see a little blip in the stock, but barely between September and October, and that of course is when the spying scandal came up.
Exactly, Jessica, and he stood outside the headquarters back to back in the cold talking about spy scandals.
Yeah, well, I think it just the fact that we've seen the stepping away from some of these targets here, it just reawakens some of the criticism that I think it will reawaken some of the criticism that Tidjane Thiam has faced from the Swiss customer base, who have never felt that comfortable with him running the business. And over the years, while he's been in charge of that restructuring program that he launched, this has not been the only problem. We know that there have been trading issues at the bank that have come to light during his tenureship, and it's been a rocky period. And hats off to him for sticking with it. But I do wonder, given the time that he's now spent at the bank, whether some of those Swiss-based investors are going to start asking what the succession plan looks like at this stage.
I think, that's probably a fair question. But to bring it back to what Karen was saying about the Spygate scandal, we did see an initial blip in the stock, but quick recovery right after that, especially after the board cleared Mr. Thiam personally of having been involved in any of wrongdoing. It's debatable whether the analyst community broadly believe that, but ultimately you can look at the stock performance, and the stock performance does tell you that so far the story has been a positive one, at least for this year. Going forward, well, as I mentioned, the investment bank is a lot smaller than it used to be. They're placing a lot of eggs in the basket of wealth management, and as we know, their high-profile wealth manager, Iqbal Khan, has now, crossed the roads. He's gone to UBS. That will raise questions about whether or not that business can continue to grow, even though they've seen good net new money this year.
Some griping about fraud too in the press too. Suggestions from Georgia's former prime minister, Russian oligarch, a letter that they published earlier in the year, and also having another go at the Investor Day. And if you talk about key clients at a Swiss bank, these are sort of clients that might bring in big business, and if they're griping about being victims of fraud, that's clearly another issue for the bank as it tries to weigh through the issues.
Yeah, absolutely. It's all part and parcel of the reputational issue that we bring it back to, whether it's a Spygate scandal, whether it's embroilment in certain issues in Africa as well. There are stories that came up for Credit Suisse as well. But I would say the bigger picture here is looking at the numbers, they're certainly marking to market. They become a lot more realistic of what they can achieve in this environment. And they're certainly not the only bank saying that, look, this is a very difficult, tricky operational environment, but this is our outlook for next year, and this is where we're going to make the money from.
He doesn't like it. Gets all annoyed with me. That's that 10-year-old row of ours.
It is a 10-year-old row, yeah. And it's not really to do with this specific story, is it? It's more
you don't like recognition of real valuations in markets, do you?
I think that's a misrepresentation of my point of view, but...
Should we carry this one off air?
Since we've got to take a break.
Oh, take a break. Thanks, Jemana.
You've got to take care of our show, so thanks for stopping by. Coming up on this show, UK party leaders get set for a final campaign dash after a new poll suggests the race to Downing Street may be tighter than expected. Details next.
Right now on CNBC Make It.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can feel your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We can't in real life. Brent Cross, London. Free parking for all sleighs and cars.
Sometimes in business, you have to take risks, but trading across borders and currencies shouldn't be one of them. With Western Union Business Solutions, we can help you manage the risk of doing business internationally. Our valuable experience, expert knowledge, and extensive global network makes us the ideal trusted partner for your business. And with our customer-focused support team, you'll receive a dedicated solution and personalized service. Visit westernunionbusiness.com. Western Union Business Solutions, a global financial network you can trust.
Dear Dad, Merry Christmas. Thank you for always doing everything you could to make this time of year special for us. No one has a Christmas jumper collection quite like yours. Your festive spirit is...
Gingerbread latte with 2 shots and nutmeg whipped cream for Joe.
I hope it snows. I know how you love a white Christmas. All my love, Joe. Heartfelt can happen anywhere with moonpig.com. Download the app and get 20% off when you buy a card and gift this Christmas. Use code Heartfelt20. Exclusions apply.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
It says I'm going to read the pound's weakened. It is. It's 130. It's down 0.0016 at the moment. There you go. Pound has weakened dramatically against the dollar after a new YouGov. No, I'd add that because it says 0.0014, so I thought I'd sarcastically say dramatically.
It was 131.17, so it's gone back up a little bit. Well, we've been on it.
Wow. You mean it's gone from 131.17 to 131.37?
Well, we went from 131.80 down to 131.17.
Show me the big handle.
Now it's gone back up a little bit.
As Cubba Gooding Jr. says, show me the big handle. He didn't quite say that, did he? Anyway, this is after a new YouGov MRP poll raised the likelihood of a hung parliament, a well-hung parliament in tomorrow's UK election. The Conservatives' predicted majority has been cut down to 28 seats from 68 2 weeks ago, with nearest rivals Labour closing the gap on Boris Johnson's party. Let's get to Willem, who's monitoring every decimal of the pound and the excitement we're seeing thereafter. Oh, it's bright there. What a lovely day. Willem.
Yeah, no complaints. The sun is coming up here just opposite Westminster in the Palace. Of course, that will be the centre of events over the next few weeks after this election. But until then, we're into the last day of campaigning here across the UK. The Prime Minister Boris Johnson travelling from the north of England to the Midlands over to Wales, and then we'll end the day here in London. Yesterday in Staffordshire, he talked about the need, in his view, for Brexit to be over and done with as soon as possible. He drove a bulldozer through a visual representation of parliamentary gridlock, and he talked about the need for the entire country to think about that requirement to get rid of such deadlock.
I think it is time for the whole country, symbolically, to get in the cab of a JCB, the custard colossus, and remove the current blockage that we have in our parliamentary system. That's what we need to do.
JCB, the name of a company that builds, manufactures these kinds of industrial vehicles that are typically yellow, hence the custard colossus. Now, one of his main opponents, Jeremy Corbyn, was in Morecambe yesterday talking about Labour's radical plans for economic transformation and how they would be fully costed.
put forward a manifesto, a comprehensive programme for this country. It's a fully costed and funded programme, and it will end the injustices and inequality and poverty in Britain and invest for the future. We're not into coalitions or tactical voting. We are determined to win this election.
And Jo Swinson, the leader of the Liberal Democrats, she was in the west of England in the city of Bath yesterday, competing again and again on this idea that Boris Johnson is not to be trusted as Prime Minister.
What do we get from the Prime Minister? It's absolutely clear. We get lie after lie after lie. You know, the Prime Minister who said that he would guarantee the rights of those 3 million nationals from other EU countries. He said, he promised he would guarantee their rights. And how long did it take before instead he was stoking hostility towards those very people in our country?
So at the centre of this election that ends tomorrow as people go to the polls, trust, truth and tactical voting, because we've heard from both Sir John Major and Tony Blair, former Prime Ministers here in the UK, they would encourage people to vote not only with their conscience, but also for parties that could stop Brexit, whether that's their typical party as a voter or whether it's another one that might have a better chance of preventing a Conservative majority.
Excellent. Thank you very much. Do you know what happens tomorrow, by the way, for our viewers?
We don't talk about the election at all.
They get a whole Brexit-free show because under UK reporting laws, under Ofcom rules, we cannot mention during the opening hours of the polls the election, apart from say that it is open, there are 650 constituents. What a relief that is for our viewers for a whole day.
We can't have a trade-free day as well. We could just add that to the mix. That would be a fantastic show for viewers.
Janet, did you want to jump in on a bit of the UK election before we're not allowed to talk about it tomorrow? Any thoughts?
Yeah, so what we want to say is just all elections are highly uncertain, and what we think is the pound has already rallied quite a lot since August, and we think a lot of that is probably priced in. So unless there's a lot of price, we don't see a lot of upside from there, even though the polls are suggesting a Tories majority. So we think, there could be modest upside, but not a lot.
There is an issue around the transition period, isn't there, that some are concerned about, because if the majority is strong enough, the fears are that Boris Johnson will go into the negotiation playing hard cop, and then we'll end up with a more difficult trading agreement, or it will take a lot longer. What's the likelihood of that, do you think, if he gets a strong government?
I think that could be quite likely, because then he will have a stronger mandate, and his stance has been like a harder form of Brexit. So I think that could be likely. But I think according to the polls, a very strong majority is quite unlikely at this stage.
What does this all mean for Mark Carney as he gets to weigh up monetary policy, the BOE?
Yeah, so our expectation is that if we do see a Tories majority, if there is some clarity on how the Brexit is going to progress, then we think the Bank of England could raise interest rate once or twice next year. But that is really dependent on the economy recovering a bit because of more clarity on the Brexit, and also the global economy also progressing.
Even if the Fed's cutting, you still think the Bank of England could be hiking rates?
So if the Fed is cutting, that would mean that the US economy is slowing, and then the global environment could be slowing as well. So in that kind of scenario, we think that the Bank of England may not hike. So our base case is, you have to see more clarity on Brexit as well as a global recovery for the Bank of England to hike.
Janet, thanks so much for being on the programme this morning. Janet Moy with us from Cazenove Capital. And as we wrap up this morning's Squawk Box, let's just remind you the headline stories we came in this morning. The first day of trading for Saudi Aramco. Those are the pictures when they rang the bell as the stock started trading 10% limit up.
The CNBC app has new features.
Christmas. A time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Make their Christmas wishes come true. Whether they love Disney's Frozen 2, want to jet off on Barbie's dream plane, or ready up with the Fortnite Battle Royale collection. At littlewoods.com, you'll find all the toys they love, all with inclusive delivery and free returns. Own Christmas. Shop now at littlewoods.com.
We've got something to tell you about the Honda Jazz. We know it looks small, but inside, it's really big. That's why we've created the small but big Jazz event, where you can get 0% APR representative and 5 years complimentary servicing on all grades until the 31st of January. The Honda Jazz, the small car with the big offer. Visit your local dealer to find out more. Honda dealers are credit brokers, not lenders. Finance provided by Honda Finance Europe, authorized and regulated by the Financial Conduct Authority. Terms and conditions apply.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night, and somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here, testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds, or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown.
Search NFL today.
To LeBron, slam dunk!
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. The Miami Heat are taking their talents to Texas to take on the second-year phenom, Luka Doncic, and the Dallas Mavericks.
Pulls back, trying to make it 11-2.
This Saturday, the Miami Heat are at the Dallas Mavericks. Tip-off is at 8:30 p.m. Eastern. Search NBA on TuneIn to follow your favorite NBA team today.
Good morning and welcome to Street Science. I'm Jemana Versace.
And I'm Juliana Tattlebaum. These are your headlines. The biggest IPO in the world gets underway here inside Saudi Arabia, with shares of Aramco soaring as much as 10% in initial trade and hitting a valuation of $1.9 trillion.
Meanwhile, the British pound weakens against the dollar after a new poll raises the prospect of a hung parliament as UK party leaders prepare for a final day of frantic campaigning ahead of tomorrow's election.
Basic Resources outperform European stocks amid reports the U.S. could push back a deadline for imposing fresh tariffs on Chinese goods.
And Credit Suisse cuts its profitability targets for this year and next, citing ongoing pressure from the negative rate environment and uncertainty from trade tensions. Good morning and welcome to Street Science. Well, we've got a very busy show for you coming up, but our top story, the world's largest IPO has made its debut. Saudi Aramco shares have opened 10% higher on the Tadawul, the local stock exchange. The oil major opened at 35.2 riyals per share, That is after listing at 32 riyals per share. That gives the company a market value of around $1.88 trillion. We can round up to $1.9 trillion, but not quite $2 trillion. Let's get out to Hadi, who's been following this story very closely, not just for a day now, but for years, Hadi. It's finally happened. The IPO has occurred, the stock is trading, and yet still shy of that 2 trillion number.
Still shy of the 2 trillion number, but 1.88 still not that bad, especially given all of the negative press we've seen surrounding the launch of this IPO, Jumana, over the last couple of years in particular, rounds and rounds of pretty negative press. And it's pretty fantastic, frankly, for me to sit here and see this, not just having covered the kingdom for 10 years, but also having covered this really from the start, from its initial announcement back in 2016 when His Royal Highness, the Crown Prince, decided to make this the centerpiece of the Saudi Vision 2030. And frankly, a lot of conversations happening, not just internationally, but internally, about how quickly we might actually see this hit 2 trillion, given the fact that we saw it trading a limit up from the very start this morning around 10:30 a.m. local time. Lots of questions about how much the government, in terms of an institutional tranche of investors, will be willing to pump up this price in the coming days. We're going to have to continue to watch that. But just to give you a sense of the scope and the size of what we're talking about here, when it comes to the retail investment, we had some 5 million Saudis buying into this Aramco IPO. That's about 13% of the population of Saudi Arabia. It really does speak to the confidence, frankly, that average Saudis seem to have, not just in the leadership of the Crown Prince, but in the company itself. And when we talk about the institutional investors as well, some 13.2% of institutional investment was coming from Saudi government institutions, 23% of that institutional tranche coming from non-Saudi foreign investors, institutional investors. The final value of that institutional tranche coming in over 105 billion. And the base dividend, remember, is 75 billion for the year. And frankly, this is something that's very, very closely tied, we think, to the yield, and something that investors are going to be watching very closely in terms of how they decide to allocate that investment, because, of course, this does have to stack up against other international IOCs, international oil companies, in terms of what the yield would be, in terms of what those dividends will look like in the coming years, especially against the backdrop of these low oil prices that we've seen. Earlier today, we saw folks coming out to speak about the launch of this IPO, including Ahmed Nasser, the CEO of Aramco. He said he was very happy with the fact that this was something that had been 5 times oversubscribed, that they seem to have finally gotten to the starting point of what will be a new chapter in the history of Aramco. We also heard from the CEO of the Public Investment Fund, who's also the chairman of Aramco. He was made chairman in the days leading up, frankly, to what were the worst terror attacks in the history of the company. As you remember, we were out at the Abqaiq facilities looking at just how much damage had been inflicted on the company, and that was just a couple of months ago. So the fact that they were able to get production back online, they weren't missing any shipments to clients, really did seem to galvanize public opinion and government opinion and company opinion internally that now was the right time to bring this IPO to market. And finally, guys, they seem to have done it.
Impressive turnaround, actually, if you put it into context of those attacks, which were only just a couple of months ago. Hadley, thank you for all of your coverage out of Riyadh on this very important day, milestone day for Aramco. Let's bring in Andy Critchlow, the head of news at EMEA for S&P Global Platts. I just want to ask you about the geographic breakdown of this IPO, because looking at the numbers, if you strip out the regional players, what's left for international investment participation is only about 5%. There wasn't a big take-up by the broader international community outside the region, outside Saudi Arabia. Why was it so low?
I think the managers of the IPO and the Saudi Arabian government, I think they had a big problem selling this overseas, to be quite frank. Certainly the conversations I've had with some of the big fund managers here in London, they were all very skeptical of it. One, on price. The price wasn't right. 2, on the ESG factor. You've got to look at an environment for investing in oil and gas now where fund managers really do have to take into account these ESG issues. Yeah. Saudi Arabia, if you look at it, if you quantify its oil output, which is Aramco, if you quantify that in carbon, it produces about 1.6 billion tons of CO2 a year. Now, that is about a third of Europe's entire output, and that is the whole European bloc. So it's vast. It's bigger than all the major 5 IOCs that it will now compete with in terms of its carbon emissions. fund managers look at that, and they look at diversification now with oil companies. And when you sit with BP and you sit with Shell and you sit with Exxon and you sit with these other international companies now, they really stress how diversified their businesses are. Now they're allocating capital to moving away from oil, to having alternative revenue streams which are geared to the new economy, which is going to come from climate change and the energy transition.
Well, on those 2 points, I mean, price and ESG, big numbers you're throwing out there in terms of carbon emissions, those two things don't necessarily change now that we're looking at secondary trading and the future of Aramco. So do you expect more foreign interest now that it's actually come to market? I mean, the chairman is talking about how they're going to boost governance and transparency in the wake of this IPO, but those two factors aren't really going to change.
Well, institutional investors buy low, retail investors buy high, right? I think the fact that the stock has popped so much today, I mean, we're near a $2 trillion valuation. I think if you're an international fund manager, you'd be kind of sitting now thinking, let's wait for some of the air to come out of this. Let's wait, watch, let's see what happens in Saudi Arabia. Do they really want to invest as an international fund manager in New York, in Hong Kong, in London? Do they want to invest in something which is now being framed as a proxy for diversification in Saudi Arabia? So essentially you're funding the 2030 vision plan. They're not interested in that. They're interested in returns and returns for their investors.
Do you expect that this stock is essentially going to trade as a proxy for the oil price? I mean, how correlated is this going to be, given that it's not that diversified yet, even though there's plans for Saudi Aramco to invest more downstream and become more diversified in the future?
And to his points earlier, there are plenty of other competitors out there already.
It's a really good question. And a couple of days ago, there was the Saudi budget that was released. On page 29 of what was, I've covered Saudi Arabia for a long time, probably the most detailed budget document they've ever released. There were some very key projections in a table. Going out to 2022, net revenue for the government falls out to 2022. So you're going to be in a situation where you've had income for the government, which is, the majority of it is oil, will have fallen into 2022. They've run a fiscal deficit then for almost 10 years. Debt is going the other way. By then 30% of GDP. And from 2021 onwards, you get a situation where actually debt outstrips income. So they will have higher net debt than they will actually have income. They're draining reserves. It all comes back to Aramco. So, if you really want a kind of forecast of what Aramco's earnings are going to look like by 2022, look at the Saudi budget, page 29. It's there in black and white.
All right. Well, thank you very much for weighing in on this historic day. I think that's fairly undisputed. Andy Critchlow, head of news, EMEA S&P Global Platts. Well, pushing on, the UK, the British pound has weakened against the dollar after a new YouGov MRP poll raised the likelihood of a hung parliament in tomorrow's UK election. The Conservatives' predicted majority has been cut down to 28 seats from 68 just 2 weeks ago, with nearest rivals Labour closing the gap on Boris Johnson's party. As Britain heads to the polls, party leaders made their pitches to voters.
I think it is time for the whole country, symbolically, to get in the cab of a JCB, the custard colossus, and remove the current blockage that we have in our parliamentary system. That's what we need to do.
We've put forward a manifesto, a comprehensive programme for this country. It's a fully costed and funded programme, and it will end the injustices and inequality and poverty in Britain and invest for the future. We're not into coalitions or tactical voting. We are determined to win this election.
What do we get from the Prime Minister? It's absolutely clear. We get lie after lie after lie. The Prime Minister who said that he would guarantee the rights of those 3 million nationals from other EU countries. He said, he promised he would guarantee their rights. And how long did it take before instead he was stoking hostility towards those very people in our country?
Let's take a look at sterling, which is trading a little bit on the back foot this morning, down nearly 10 basis points versus the dollar at 131.43. Now, I am very pleased to bring in our next guest, Alistair Campbell, former chief strategist to former Prime Minister Tony Blair. Thanks very much for coming into the studio today to speak with us. Let's just pick up on the latest poll numbers, raising the prospects of a hung parliament, showing that the Conservatives' lead has actually narrowed. The majority now expected at 28 seats from 68 just 2 weeks ago. What do you pin that down to?
Well, I wouldn't put too much store on any poll right now. I also think, don't forget, a lot of people already voted through postal voting. Look, I think it's possible. My own view is I think that understates where the race is right now. And I do think one thing that is happening, I think tactical voting, where we have a very different electoral system. The reason why Johnson wanted this resolved in an election, not a referendum, is he can get away with winning with little more than a third of the vote. So I think what is happening is that people realise that the chances of Labour getting a majority are pretty much zero. So the choice is between Johnson having a bit of power or a lot of power. And I think the country are getting kind of pretty sickened at the thought that it might be a lot of power, and therefore a lot of tactical voting is going on. That means that people like me, who are kind of historically Labour, might in some circumstances look to vote for a Lib Dem candidate if they're best placed to win, and vice versa. So that is definitely happening.
And of course, this tactical voting actually cost you your membership of the Labour Party back in the European elections. So let me talk about the Lib Dem angle, because actually, if you look at what's happened to that particular party, they've solidly declined in the polls over the last couple of months. And actually, latest projections are showing that at most they'll probably pick up a couple of seats.
Yeah.
What do you point that down to? Why are Lib Dem not securing higher than they should be at this point?
I think partly it's back to the point about the electoral system. Historically, we're a two-party system. Very occasionally, there'll be moments where it looks like that might break down. At the European elections, people like me, it's possible in the European elections, you're not choosing the government, and it was a possibility for people to express a protest about the main parties and their approach. I think that they've been squeezed. I also think the Liberal Democrats made a few big mistakes on the way. I think actually having a policy of saying they will just revoke Article 50 and reverse Brexit without another referendum, I think that was a mistake. I think Jo Swinson, the leader of the Liberal Democrats, presenting herself as standing to be the Prime Minister, I think that was a mistake. And meanwhile, I think that the focus in the campaign has gone very much to the choice of Prime Minister. Do you want Boris Johnson? Do you want Jeremy Corbyn? Now, the truth is, I think the country wants neither. I think we're in a least worst option election, and that's why I think it is possible, I only say possible, that you may end up with the country saying we don't want either.
It's interesting because you're actually the third person we have in a row saying that this has moved away from the choice of Brexit to the choice of person. It's become about personalities here, a choice between Boris Johnson and Jeremy Corbyn. The voters are not really convinced by either side, but in the situation as it stands, if we do end up with a Tory majority, what does that tell you about the mandate that Boris Johnson is getting to deliver on Brexit?
Well, he will have a majority to deliver the Brexit agreement that he has secured. But I think the problems then begin again for him because, look, he won the referendum by lying. Get Brexit done is another form of lying because it's not going to get Brexit done quickly. We're going to be living with this for a very long time. And as the reality of that becomes apparent, then I think actually you're going to see an awful lot of anger, an awful lot of disappointment. I have to say it's been one of the most joyless, miserable, dispiriting elections I can ever remember anywhere in the world. He just spouts out his slogan, get Brexit done, get Brexit done. Labour give the impression that just by putting a little bit more tax on a few people, the world can be kind of rescued. There's been no really big argument about the state of the world and the state of the country and our future. And that's why I think most of the people, I've been going out campaigning in different parts of the country, I've never been in an election in an atmosphere that is so kind of down and sullen about the future of the country. And whoever wins that in those circumstances, I think has a very big challenge.
But surely this scenario that you're painting based on your experience going out campaigning and, the commentary that we've had that, this is sort of an election of the best of the worst possible choices. Does this mean that we're in for a political realignment? And, if this isn't the cause or the catalyst to see that, what is going to be?
That is a very good question because the thing you hear out there all the time is that the Tories have moved to one extreme, Labour have moved to another extreme. Therefore, why is the centre ground not being filled by something? And that I don't have the answer to that, but I think it is partly this point about our electoral system. And so, but the only way that can change, and people, if I had £1 for everybody who said, why don't we have proportional representation? We had the chance to change the electoral system in a referendum, and the public couldn't be bothered to turn out. And now through another referendum, David Cameron's referendum, we're in this complete mess. And I think this mess, actually, you talk about symptom and cause, this mess is actually created by Brexit. And I think until the country faces up to that, we are going to go into a period of decline.
Well, you can't really turn back the clock, arguably. One last question for you. If Labour don't win this next election, what happens to Jeremy Corbyn? Does he stay on?
Well, look, if you look at the ratings he has now, it's hard to see how he really thinks he kind of merits that. But look, we've got the election tomorrow. We'll see what happens. I expect that it's going to be... There's no result I see likely now that fills me with great joy. I really hope that the country, given it doesn't want either of them, doesn't give power to either of them, we do end up with a hung parliament and then Brexit gets taken back to the people as it should be on its own terms.
And do you hope to get reinstated by the Labour Party?
On verra.
On verra. Okay, that's good use of French, but given that UK is not going to be a part of the EU anymore, we should say it in English.
Yeah, well, Campbell. Maybe, but I might move over there.
Thank you very much for joining us on the show. Alistair Campbell, the former chief strategist, the former Prime Minister Tony Blair, also coming up in Street Signs. A look ahead to Christine Lagarde's first policy meeting as the European Central Bank's new president. That's coming up in a few moments.
What I love most about being a scientist at 3M is that I'm part of a community of...
Cutting for the net, scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
You can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
We can't make traffic move faster during rush hour. But we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every in the league. Amazing, right?
Steps up, floats it towards... At the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today. Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards... At the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Well, a very warm welcome back to Street Signs. Let's get a check on equity markets here in Europe. A bit of a lackluster morning coming together, a bit of regional divergence. Early on, we saw the DAX and the FTSE 100 outperforming. But as you can see here, the DAX now flatlining over the course of the morning. The CAC and the FTSE MIB slightly underperforming. Investors, I think, safe to say, awaiting some big developments later this week, starting today with the Federal Reserve meeting, where investors expect the Fed to keep hold on rates, but will look to Jerome Powell for his commentary on the future. And then, of course, we've got the ECB tomorrow and the UK general election tomorrow. The FTSE 100 trading a touch higher this morning, and that comes alongside a pullback in the pound, as the latest YouGov poll has shown the predicted majority of the Conservatives has now slipped to 28 from a lot greater than that just 2 weeks ago. Let's take a look at sectors and see what the split looks like in that respect. A bit of green across the board this morning. Basic resources outperforming, up about 1/3%. Autos, the key outperformer this morning, up 0.5%. And down at the bottom, we've got real estate, media, and household goods underperforming. But no major moves when we look at the sectoral performance or the regional performance, as investors seem to be exhibiting a bit of cautiousness ahead of those events I just mentioned. And then, of course, the December 15th tariff deadline coming up, where the Wall Street Journal has reported we could see a delay to those tariffs. Nevertheless, investors waiting for some concrete news. Germana?
Well, Juliana, all eyes will be on Christine Lagarde tomorrow as she chairs her first ECB meeting as president. That occurs on Thursday, which is tomorrow. Lagarde is not expected to announce any major policy changes or to move rates from record lows. Investors will also look for signs of unity on the Governing Council and whether Lagarde will continue calls for governments to boost spending. High expectations going into tomorrow. Let's bring in Moritz Kramer, the Chief Economic Advisor from Accreditas. Moritz, it's great to have you with us. Let's talk about Madame Lagarde's first inaugural meeting tomorrow. Certainly expectations are high. People want to figure out what type of style she's going to have versus her predecessor. And of course, there are a lot of expectations about this upcoming strategic review. But it seems to me like at first, at the top of the things that she needs to sort out is the communication coming out of the ECB. Ever since September, it's been mayhem.
Good morning, Jemima. Thank you for having me. Yes, tomorrow is a very big day. This is a pivotal day for Christine Lagarde. It's a first big test, and as we all know, you only have one opportunity to make a good first impression. And I expect sort of a record turnout in terms of investors watching the press conference, which will be the key set piece for her tomorrow. So a lot has been said, and I agree with that. Her style of communication will be different from Mario Draghi's. Draghi has been sort of very, very reliable. There was not a slip of the tongue in 8 years that I would now remember on the top of my head, so the bar is very high. She will have to introduce her own style, and it will take investors and commentators some time to get used to that and interpret what she's trying to say. So there are two learning processes here. One for Christine Lagarde herself, how to address the general public and the investors, much more scrutiny than what she was used to under the IMF. And then there's a learning process also for the rest of us to trying to read her. We've been pretty proficient at the end with reading Draghi, but this is sort of a new start for all of us.
Moritz, what do you think she does with all of the disgruntled members of the ECB? And certainly here, I referred to that in my first question, but the members of the ECB that have spoken out in protest after the September ECB policy decisions, many people not happy, Germany, Austria, to name a few. What do you think she's going to do to try to get them on board, if at all?
Well, right now, there is a truce, I would say. So it's gotten very quiet. I think the strategic review that you referred to early on will be key, because this is where the big decisions will be taken, maybe for a decade or more. Remember, the last strategic review happened in 2003. So this is gonna be very important, and all the members of the Governing Council will try to make their voice heard. What I think should be done, however, is in order to prevent this ambush that we've seen after the September decision and this openly debated discord in the Governing Council, is to make the voting more transparent. First of all, have a formal vote and then publish the votes. There's been an argument against that because you don't want the votes to be associated with particular nations. But I think this has happened anyway. Everyone knows sort of what Jens Weidmann's view is. Everyone knows what Klaus Nott's view is. So in a way, the association with the nation they're coming from is already there. So give them a platform to voice their opinions in an orderly way. And that would also help the investors actually to gauge what the future trajectory of monetary policy could be. So I would hope that the end of the strategic process in terms of, or review in terms of communication, would be to be more transparent and more open about what the Governing Council has debated and how they have voted and decided upon it. This is currently very opaque, and the ECB is quite unique in that among the major central banks. All of them publish the votes, and I think the ECB should fall into line with this best practice.
And now more, it's one topic that's just outside the realm of monetary policy is green policies and climate change, and it's becoming a hotter and hotter topic when it comes to the European Central Bank. Do you think there's any conflict of interest with the central bank focusing more efforts on climate change in terms of their primary mandate of price stability?
No, I think there's no conflict. I mean, the mandates of the ECB is very clear. Primary mandate is price stability. That's in the treaty. But the secondary mandate is to support the policies of the European Union as long as it does not interfere with the primary mandate, which is price stability. Now, we just had a new European Commission coming in, and this European Commission's flagship policy initiative is the Green New Deal, which President von der Leyen just announced, I think, last week. So this is totally consistent with the secondary mandate. The question is how much the ECB can really do. I think in some quarters there's some exaggerated expectations that the ECB can have a major influence on climate change policies. It cannot. It can help, it can assist, but the key issues affecting climate change, like regulation, like pricing of different types of energy. This is all a matter of national governments, and they are sitting right now actually in Madrid and trying to figure that out. So this is not the responsibility of the ECB. The ECB can help, the ECB should help, and they probably will help, but it will only be a marginal player in this.
Moritz, thank you so much for joining us. Moritz Kramer, Chief Economic Advisor, Accreditus. We're going to take a short break now. Coming up on the show, UK party leaders get set for a final campaign dash after a new poll suggests the race to Downing Street may be tighter than expected. Details next.
Beyond the routine checkups, beyond the not-so-routine cases. Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, plunges into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
We can't make traffic move faster during rush hour. But we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
Welcome back to Street Signs. I'm Juliana Tattlebaum.
And I'm Joanna Versace, and these are your headlines.
The world's largest IPO makes its debut as Saudi Aramco shares soar 10%, hitting the Tadawul's daily limit and giving the oil giant a $1.9 trillion valuation.
The pound weakens against the dollar after a new poll raises the prospect of a hung parliament as UK party leaders prepare for a final day of frantic campaigning ahead of tomorrow's election.
Basic Resources outperform European stocks amid reports that the U.S. could push back a deadline for imposing fresh tariffs on Chinese goods.
And Democrats formally announced 2 articles of impeachment against President Trump, making him the 4th U.S. president in history to face such charges. Well, Saudi Aramco shares have opened 10% higher in their debut on the Tadawul. Speaking earlier, the CEO Amin Nasser gave his reaction to the listing.
We are progressing based on what was decided, which is to list Aramco at 52 riyals per share. This was agreed based on this full analysis and evaluation. We are happy on the results today, and you have seen the market response to our results. The company will continue to be the leader globally when it comes to the energy sector, and at the same time, we are looking at sustained and growing dividends to our investors.
Meanwhile, the pound has weakened against the dollar after a new YouGov MRP poll raised the likelihood of a hung parliament in tomorrow's UK election. The Conservatives' predicted majority has been cut down to just 28 seats from 68 2 weeks ago, with nearest rivals Labour closing the gap on Boris Johnson's party. Let's get out to Willem, who joins us now from central London with more. Willem.
Thanks so much, Juliana. Well, you mentioned the poll that's just come out last night. I'm happy to say this morning we're joined by one of Britain's leading poll experts, John Curtis. He's a professor of politics at Strathclyde University. Walk us through what you learned from the MRP numbers that came out last night from YouGov. We've seen the provisional prediction around the Conservative majority shrink from 68 to 28. There is a margin for error. What does that mean?
Well, the poll has 2 crucial statistics. The first is it's saying that we think the Conservative lead over Labour in terms of votes is 9 points. That's very slightly less than the average of all the polls at the moment, but actually it's bang in line with YouGov's last regular poll. And then they're saying, however, given those numbers, we would expect the Tories to have around 339 seats, which actually is more or less what you'd expect anyway. Now, to that extent at least, the poll is confirming what we've long suspected, which is that the Conservative lead over Labour has narrowed a bit as compared with a fortnight ago, which is when this exercise was last conducted. That said, the lead in the polls a fortnight ago was somewhat bigger than it was at the beginning of the campaign. And actually, at 10 points, the average lead in the polls now is exactly the same as it was at the beginning of the campaign. But I think the point is that this poll emphasises 2 things that we've long known from all of the polling. The first is we have to remember what the Conservatives have to do in this election. If they're going to get the withdrawal treaty that will secure the UK's exit from the European Union by the 31st of January, they have to get an overall majority. It isn't enough just to get more seats than everybody else. They have to get past the 326 mark because no other party is willing to vote for the government's withdrawal treaty. Not even the Northern Ireland DUP, who was supporting the government in the last parliament. And to get to 326, therefore the Tories actually have to do rather well. We've long been suspecting probably 6-7 point lead at minimum to get a majority. Well, once you get a poll that says it's 9 points, you begin to get quite close. And indeed, as you already pointed out, the statisticians who've analysed this are then pointing out, well, given that all polls are subject to a margin of error, it's all, when you sample a section of the population, you don't always get it spot on. You can't therefore rule out the possibility that maybe in the end, we will end up with fewer than 326 Tory seats, albeit that is clearly still by far the less likely option of the 2, hung parliament versus Boris Johnson having a majority.
From what you've seen of the numbers that have come in over the last few weeks, and particularly these ones that have honed in on constituency details, is there a more powerful force amongst would-be Labour supporters in favour of Brexit or typical Conservative voters in favour of remaining inside the European Union?
Well, the truth is that one of the intriguing things about this election campaign has been the way in which the level of support for the Conservatives amongst Remain voters has just essentially stayed the same. It's essentially been just below a fifth of the vote. It's not gone up, it's not gone down. All of the progress the Conservatives have made during this election campaign, and they have made progress, has been amongst Leave voters at the expense of the Brexit Party. Equally, Labour's progress in this campaign, because they also have made progress, it's just that Tory and Labour have made equal amounts of progress. The progress that Labour made in this campaign has been primarily amongst Remain voters at the expense of the Democrats. Their vote amongst Leave voters has gone up a bit. Indeed, today's big YouGov exercise suggests it may have gone up amongst Leave voters a bit. But most of the progress has been made on the Remain side. So at the end of the day, what seems to have been going on is essentially the Conservatives have become even more clearly in the eyes of voters, the party to vote for if you wish to leave, and Labour have become more clearly in the eyes of Remain voters, the party to vote for if you're in favour of Remain. But the Remain vote is still much more divided between Labour and the Democrats than the Leave vote is on the other side. And the foundation of Boris Johnson's lead in the poll indeed rests on that fact. 70% of Leave voters voting for the Conservative Party, rather less than half of Remain voters voting for Labour Party. Ergo, you get a Conservative lead.
If you're a voter, if you're a business owner, if you're a currency trader watching results come in tomorrow night, what should you be looking out for that gives you an indication? It's very difficult, obviously, to know which results will come and when, but what should you be looking out to understand what the big picture is looking like?
It looks as though the crucial battleground are, of course, going to be marginal Labour seats, but particularly marginal Labour seats which voted to leave in 2016. Around 4/5 of the most marginal Labour seats are seats which voted to leave in 2016. And given that Labour are indeed clearly weaker amongst Leave voters than they were in 2016, this is both the source of Labour concern and of Conservative hopes. The Conservatives are hoping that in these constituencies, many of which swung to the Conservatives in 2017, will swing even further because voters there want to vote in favour of Brexit and think that only voting for Boris Johnson is the best way of getting it done. And we are looking at a number of constituencies: Wrexham, Ashfield, Bishop Auckland in Durham, Workington in Cumbria. These are all traditional Labour seats in Wales, Midlands, north of England, traditional Labour territory, where we think perhaps the Conservatives might be able to win. And in truth, if Boris Johnson is going to get a relatively secure majority, he's going to have to win a significant number of these seats. And one of the things for him to worry about in the poll that's come out this morning is that while he's still picking some of them up, according to YouGov, maybe some of the ones that he would like to have may now be beginning to elude his grasp.
Leave it there, John. Thank you so much for your time this morning. That was John Curtis. He's a professor of politics at Strathclyde University, saying that some of those key marginal seats that have traditionally been Labour supporting are not necessarily quite as easily in the grasp of the Conservatives as the Conservatives might have hoped, guys.
Getting to nail-biting territory, isn't it, Willem? Thank you very much for that interview with John Curtis. And indeed, as you mentioned, all eyes will be on the latest polls. And of course, tomorrow is the big day. General election is tomorrow. FTSE 100 trading on the back foot at about 5 points lower. And actually, if you look at the individual composition, a lot of these stocks that have exposure to the domestic market, property developers, the domestic banks, are trading close to the bottom. We can see that the German index has just switched to positive territory today, only just, but broadly speaking, the mood is pretty negative across the board for European equities. CAC 40 in France down about 0.25 percentage point. This despite some positive news potentially on the trade war front. Wall Street Journal article pointing to the possibility of an extension of that December 15 tariff date, giving somewhat of a boost to equities overnight, but we're not really seeing it in Europe this morning. Keep an eye out as well on the big central bank meetings we have coming up. The Fed this afternoon, not expected to do anything on the monetary policy front. Investors will be looking out for language. And of course, the European Central Bank meeting tomorrow, Christine Lagarde's first. So let's see how the euro is trading going into that ECB meeting. We've got it trading slightly on the back foot to the tune of 110.80. We were close to 111 yesterday. Today we're dropping a little bit, and certainly that is on back of some strength that we're seeing in the greenback. And you can see also all eyes on the pound this morning. We got very close to that 132 level before paring back, and this after the YouGov MRP poll came out yesterday. yesterday, pointing to a dwindling of the majority that the Conservative Party has over Labour, and pointing to a projection of 28 seats majority versus 60 plus a couple of weeks ago. So certainly the projection is a downward trajectory for that lead that the Conservative Party has over Labour. We'll have to see the results on Friday morning. So that is the picture for foreign exchange. Let's take a quick look at U.S. futures as well. And after a slightly negative session yesterday, the three majors are seen opening up moderately positive. Dow a couple of points above zero. NASDAQ as well seen opening up higher. Don't forget, we've got CPI numbers to watch out for later as well.
Thank you very much, Jaman. Well, a couple corporate stories to highlight for you. Inditex has reported a 14% rise in third quarter net profit. The Spanish retailer credited the results to its ability to adapt quickly to changing design trends. The owner of Zara also said it expects 4 to 6% growth in full-year sales. In the banking space, Credit Suisse has pared back its profitability targets for this year and next and warned its investment bank will make a full-year loss. The Swiss lender says return on tangible equity will exceed 8% in 2019, but be below the previous goal of 10 to 11%, which is now the aim for 2020. However, Credit Suisse still intends to dish out more than half of its net income to shareholders with a bigger dividend and a share buyback.
A bit of an underwhelming reaction in the stock, though, down about 0.4 percentage points. I would say no big surprise for the investment community that they've revised downwards their return on tangible equity targets there. Now, also coming up on Street Signs, the battle lines are drawn as Democrats move one step closer to impeaching the U.S. Commander-in-Chief. The president's reaction after the break.
A lot of folks ask me why their dishwasher doesn't get everything clean. I tell them it may be your detergent.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds,